Alright guys, so I'm going to present Algo Ultimate here. I think most of you guys are wondering, well, why is it priced at €165 a month? It's pretty expensive, while something like Algo is priced lower, which is a much more popular company. So I want to show which kind of value this gives and give some kind of tutorial for it. So Algo Ultimate is the same indicator as the Honest Algo Premium, but it has a connection to fully automated. While setting alerts in Honest Algo Premium, they will be fixed. You can't change the message, so an automation can read it and connect it to your trading. No, it's just going to be an alert on TradingView, so you can go to the chart, look at it, and decide for yourself if you want to enter a trade, which is still very big value. So first and foremost, what are these candles based on? These candles are based on the recursive market environment indicator, which is part of our essential plan and the basis of most of my strategies. So let's show it here. I'm going to do a separate video on the recursive market environment, but it basically on different levels, it measures the trend strength using zigzags. So that's basically it here on the short term, which is I think this is the yellow line. It measures a very strong bullish trend because it's been the bullish zigs have been much larger than the bearish ones. So this is very strong bullish. So this is about 100% stronger, even more than the bears. So keep that in mind when we cover the other indicator. So this does its calculations on every bar instead of just the last bar. So this takes a while to load. It's sometimes it doesn't even load because TradingView got some errors when it's taking too long because it put some pressure on their servers and they put a limit on it. So sometimes you just need to go to same chart but different broker and make it load again. As you can see, it takes a while. Maybe isn't even going to load now. Okay, so this, as you can see, it gives some signals on the chart, and from these signals it will go to the full automation. Let's cover the settings. So here you got scalp, day trade, swing, and invest. This is for the candles. This is the environment, using recursive environment. So this is the short term, zigzag, medium term, long term, very long term. So that's it. That's for the trend filtering. Then here, which is a very important setting, is the trend percent. So if you remember the bulls and the bears in the recursive market environment, here you can specify, okay, I only want to send a long signal if the bulls are 30% more bullish than the bears. Same with the bears being stronger than the bulls for short signals. So it's a threshold to use. It's very important because sometimes you only want signals when the trend is extremely strong, but on things like a trend continuation, which is a pullback signal, it doesn't need to be very strong for me. Just having an edge of 30% bullish is good enough. So here you also got some signals. These are pretty basic. Most of the heavy lifting is done with the environment mode and the trend percent, but this is just some extra confirmation before sending the signal. This is a simple trend continuation. So if a high is made, it pulls back, creates a candle which is breaking a trend line from this. It's going to create a signal. So pretty simple. Then you have the consolidation retrace, which is a bit less simple. It will measure if the market is consolidating, so yellow candles. So if the trend difference between the bulls and bears is below the threshold. So here during the yellow, it's going to start sending signals. These are based on the stochastic indicator, which you can customize in the settings below. It's basically overbought, oversold type of signals. Then you have the tank and cross, which is a simple Ichimoku type signal. If you know Ichimoku Cloud, it will be easy to understand. It's just the tank and sen crossing the Kijun sen. It's very similar to the trend continuation. As you can see, the signals are at, well, it's different positions, but it's at quite similar positions. Then you got the Ichimoku oscillator signals. These happen quite a lot. If it loads, you're gonna see there will be many signals here probably. Yeah, so this is using my Ichimoku oscillator indicator, which you can find on my profile. It's just when the white wave crosses the blue wave. So if there's a trend on the Ichimoku oscillator, the crossovers, it's going to generate signals. So this is quite nice if you want to keep adding positions during a strong trend on some pairs. It works very nice. If you just want to increase the amount of trades on that pair, this is a very nice signal. I'm obviously going to add more signals to this or refine the ones already in here in the future. This is the first version of the indicator, so it's definitely going to improve soon. Also, one thing to take into account, scalp mode is usually the best one to use, as it is the short-term trend, which is most powerful. I noticed this in my backtesting. So just use the scalp mode. These modes are there if you want maybe some longer lasting trades or if you want to experiment. But I'm going to create a more lightweight version of Honest Algo Ultimate in future, which is only going to run on the scalp mode to avoid calculation errors because the script just takes so goddamn long to load. So here is 6x settings, then trend line with break settings. This is for trend continuation, consolidation, hunter, stochastic settings, Ichimoku oscillator settings. This should be pretty self-explanatory. If you don't know what these are, just visit the publication on the Ichimoku oscillator. So then here, this is what differentiate Ultimate from Premium. You can set up some signals to go directly to your broker using TradingView.to website, which, well, it's only costing €5 a month per terminal, so it's very cheap. I'm going to add a Pine connector there also. For me personally, I use TradingView.to because it's cheap and I want to run multiple trading terminals. So with Pine connector, the costs can run up very fast because it's like €25 a month. I'm not going to use that, but some people might prefer it. So you just type in the signal, which lot size you want to use, then TP in percent, stop loss in percent. Probably going to add ATR as a target and stop loss in this before I publish the thing. But it's the same concept, just put in your targets, whether you want to only use longs, only use shorts, or both. By default, it goes in both directions. So that's pretty nice. So if you have this set up, you can just add an alert. In the settings bar in notifications, you're going to have to set up, copy the webhook from TradingView.to. So it directly connects to their service. I'm not going to open this because I don't want you guys to spam my own webhook. So just keeping it like this, it's all going to send the alerts in the right format for TradingView.to. So you just have to input the webhook and that's all. So that's it for Honest Algo Ultimate now. Then, of course, these signals, they don't work very nice on every single pair. So you want to do some backtesting. I created my own indicator for this. This is because I don't trust the strategy tester that much. Strategy tester creates some troubles when you are in a long position and then a short position is opened here. The long just gonna close it. It can't keep them open, so that's not very nice at all. It creates some frustrations in the backtests. They are not as accurate, in my opinion, if you go both long and short. So that's why I created my own framework. It's just doing very similar calculations as a strategy tester, but as an indicator. So here, as you can see, it plots the positions. I'm using a small take profit compared to the stop loss in this example because I love having a high win rate. As you can see, it's profitable on this pair. You can see the amount of wins, the amount of losses. Then strange, this is also an important thing. This is going to count for a strange one if there is a candle after the open, which touches the take profit and the stop loss. So the indicator will not know if it was a win or a loss. So it's going to put it in strange because sometimes you have these people, they use a very small stop loss and a huge TP, and then the candle doesn't know which one got hit, so it's going to 50-50 it. So it sometimes counts as a win, sometimes as a loss, and then, well, the strategy looks extremely good, but the data isn't as accurate. So this is, if this number is high, maybe the targets aren't far enough, so the backtest isn't really accurate. Then the most important stat is the 63% win rate. So how I do this, I usually test a chart, don't optimize. I usually, in my spreadsheet, I put in like how I'm calculating the stop loss, the TP, which signal I'm using. Um, Usually I also put in the threshold I'm using. It's not in here, but okay. So here, this is on my old one. So this would be a 30% threshold like I'm using here. So I'm using pretty similar settings. So in the framework, probably going to do another video about this. But you can select ATR based, percent based, pips based, then the distance to the stop loss, and then the reward risk ratio. So here it's negative 0.7. So this means the TP is only 70% distance as a stop loss. So these are very useful stats to keep in mind. So here win rate is 63 and the risk to reward is 0.7. I then go to a Monte Carlo type simulation tool. You can just type in Google Equity Curve Simulator. You will probably find this site. So you can input, okay, it's a 63% win rate, win to loss 0.7. Number of trades, this is about 400 trades. So this would be if we would have traded this entire chart. Okay, number of simulations, 20, risk per trade, 1%, start equity. Put this at 1,000, because why would you trade a $100 account on Forex? You can't really control your risk, but that's besides the point. Let's start the simulation. As you can see, you have a chance of losing a lot of money with this if you get bad luck. But most of them go up. If you would run 20 of these bots, if you had 20 pairs with similar stats, you would get this average line, which looks very decent. So I usually run a couple of bots in my accounts to smoothen out the equity because sometimes, yeah, they just don't work. And it doesn't mean that the strategy is not good all the time. You just could have a very bad year. So I advise to run at least 5 trading bots per account. Of course, I can't guarantee any profits. I have some moments where I have like 4 months of drawdown in a row myself. It's difficult to keep trusting the system. Like these people online, they expect to have an equity curve like this or even faster up all the time, but that's just not reality. You could even run my bots and have lose all your money if you use too much risk or use the wrong pairs or just got bad luck. So it's no magic get rich quick. These bots, it's just the tools that I personally use. So I hope you guys like them. So here you can see some stats. What's going to be your max drawdown, average performance, the biggest max drawdown. So this, I would add something to it just to be safe. Maybe run more simulations to check if I can get it higher. So I would say 30% would be your maximum. Maybe if there's fees involved, it could be 35% drawdown. So when you run the bot, you can see this is to be expected. A 30% drawdown. You just have to think what's the worst case that's going to happen and be mentally prepared for it. If you can't handle a 23% drawdown, like, yep, just lower the risk in your trading. So there you can see it's much more manageable. Then again, I personally like to use higher risk because I would then use 2% risk per bot, but run 5 bots, so it could become 10% risk. And here, yeah, it's a very high drawdown maximum. But then the average performance gets to 1255%, which could be done in a year. This is a bit too much for me. Drawdown is too much. So we just play around with this tool and look, okay, this is still too much. Maybe run 3%. Okay, this is manageable. I target about 100% a year. It's a big drawdown, but still manageable. So this is how I would use them myself, but I'm a big risk taker, so take this with a grain of salt. I personally created these, so I trust the system, but if you use someone else's tool and it creates a drawdown of like 60%, most likely you're gonna turn off the bot. So always take your mindset into account when using these. So I usually go through all the pairs of my broker with a specific setup like this one and check the win rates. Okay, as you can see, it's not profitable on this pair, and that's to be expected. Not all pairs work, so that's why I usually create like a spreadsheet, highlight the ones that work in green, and then I have this list of all the settings that I know are pretty good, expected return per trade, whatever, and then I allocate them to my funds, select which one I'm going to use per trading account. So that's how I do the fund building. Again, not profitable on here. So here it's profitable, it's mostly been the shorts. So yeah, this is the process. This is why the backtesting framework is an ultimate, because then you can start building your own trading portfolios. So some people might say, well, this strategy doesn't work on every single pair, so it's not a good strategy. So that's just complete bullshit. You have some billionaire funds, they just trade long positions on the S&P 500 on specific moments. So Do you really think that strategy is going to work on AUD USD? No. But still, they managed like 50 billion in funds. So just have to know the right pairs and trade the strategy that works on these pairs. So that's just a myth. If you truly want a strategy that works on every pair, I think you would have to use a martingale or a grid strategy, which is just gambling, but well, these work pretty well on most pairs, but I'm never going to sell any of these. And if I would put it very clearly in the description that this can blow up your trading account. But please don't blame me for any trading losses. I try to give everything I want to give in this indicator, the signals. I think this works pretty well. But of course, trading is risky and you could just be using too much risk or whatever, select the wrong pairs, get some bad luck. So don't call me a scammer, don't do any of these things. I mean, come on. I try to give everything I've got in this, so just be respectful.